Most traders are chasing something. They are chasing that one big trade, that one perfect setup, that one moment where everything goes right and they make a large amount of money very quickly. And it feels exciting. It feels powerful. It feels like success. But here is the truth that most traders learn only after losing money. Big wins do not create long-term success. Consistency does. And in many cases, the desire for big wins is exactly what destroys consistency. In this video, I want to explain something very important: why consistency beats big wins in trading. Because once you understand this deeply, your entire mindset will begin to change. You will stop chasing the market. You will stop taking unnecessary risks, and you will start building something stable, something repeatable, something that actually grows over time. If you stay with me until the end of this video, you will understand why big wins are dangerous, how consistency creates real growth, and how you can train your mind to focus on disciplined execution instead of emotional results. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, and long-term consistency. Now let us begin with a simple truth. Big wins are unpredictable. Consistency is controllable. This is the most important difference. You cannot control when the market will give you a big move. You cannot control how far price will go. You cannot control the outcome of a single trade. But you can control your behavior. You can control your risk. You can control your decisions. You can control your discipline. And over time, that control is what creates consistent results. Now let us go deeper. Why are traders so attracted to big wins? Because big wins create strong emotions. They create excitement. They create confidence. They create a feeling that you have figured out the market. But this feeling is temporary. Because after a big win, something dangerous usually happens: overconfidence. The trader starts believing they understand the market perfectly. They start taking more risk. They start ignoring their rules. They start chasing another big win. And this is where the damage begins. Now let us talk about what usually happens after a big win. A trader takes a large position. The trade works. They make a big profit. They feel confident. They feel powerful. And on the next trade, they increase their position size. They take more risk. But this time, the trade loses. Now the loss is large. Now the previous gain disappears. Sometimes even more than that. This pattern repeats again and again. Big win, overconfidence, big loss. Now compare this with a consistent trader. A consistent trader does not chase big wins. They focus on executing their system. They take trades based on rules. They risk a fixed amount. They do not change their behavior after a win. They remain stable. Over time, their account grows. Not in large jumps, but in steady progress. Now let us talk about what consistency really means. Consistency is not about winning every trade. Consistency is about doing the same thing every time. It is about following your plan. It is about controlling your behavior. It is about staying disciplined even when emotions appear. Consistency creates stability, and stability creates growth. Now let us talk about trading edge. Every trading system has an edge, but that edge only works over a series of trades, not one trade. If you take one trade with high risk, you are not using your edge. You are gambling. But if you take many trades with controlled risk, your edge has time to play out. This is where consistency becomes powerful. Now let us move into real trading examples. Imagine a trader who risks a large portion of their account on one trade. The trade wins. They make a big profit. They feel successful. But on the next trade, they repeat the same behavior. They take another large risk. This time, the trade loses. Now the loss is large. Now the account is damaged. Now the emotional pressure increases. Now imagine a disciplined trader. They risk a small percentage on each trade. They take multiple trades. Some trades win, some trades lose. But the process remains the same. Over time, the account grows steadily. This is the power of consistency. Now let us consider another situation. A trader experiences a losing streak. They feel frustrated. They want to recover quickly. They take a high-risk trade. They try to recover everything in one move. This is emotional trading, and it usually leads to more loss. Now imagine a professional trader. They experience a losing streak. They do not change their risk. They do not change their behavior. They continue following their system. They understand that losing streaks are part of trading. And over time, the system recovers. This is mental stability. Now let us talk about something deeper. Consistency reduces emotional stress. When you follow a structured process, your mind becomes calm. You know what you are doing. You know what to expect. You know your limits. This clarity reduces fear. But when you chase big wins, Your behavior becomes unpredictable. Your risk changes. Your decisions change. Your emotions increase. This creates stress. Now let us talk about mental frameworks that support consistency. The first framework is process over outcome. Focus on how you trade, not the result of one trade. The second framework is long-term thinking. Think in terms of many trades, not one trade. The third framework is emotional control. Do not let wins make you overconfident. Do not let losses make you fearful. The fourth framework is discipline. Follow your rules every time. Now let us talk about practical exercises. One powerful exercise is fixed risk per trade. Decide your risk percentage and stick to it, no matter what. Another exercise is journaling. After each trade, write down, did I follow my plan? This builds awareness. Another helpful practice is reviewing your behavior. Look at how you traded, not just the results. Another exercise is setting limits. Limit your trades. Limit your losses. This protects your mindset. Another important exercise is slowing down. Do not rush trades. Wait for quality setups. If this video is helping you understand the importance of consistency, consider subscribing to Bull Mindset, because consistency is what creates long-term success. Now let us talk about something even deeper. Consistency builds trust. When you follow your system again and again, you begin to trust it. And when you trust your system, you stop reacting emotionally. You stay calm. You stay focused. But when you chase big wins, you break that trust. You create instability. You create doubt. Now let us move toward the final message. Big wins are exciting, but they are not reliable. Consistency may feel slow, but it is powerful, because it builds over time. You do not need one big trade. You need many disciplined trades. You need control. You need patience. You need structure. Let me leave you with one final thought. Trading success is not about how much you make in one moment. It is about how consistently you execute over time. Focus on consistency. Focus on discipline, focus on control, and the profits will follow. And if you want to continue building that mindset, subscribe to Bull Mindset.
Sincere, I will see you in the next video. Thank you for watching.